It's the Market Sniper. Okay, so we're with you and we're looking at the GBP USD. I haven't spoken about the pound as much as I have the yen, the euro, the won, but we have spoken and dealt and done research on the pound. One of the key things that we highlighted some time ago, in and around June in 2021, going into the August, September, October period, is that there was a head and shoulder. This actually is occurring inside a wedge formation near the top end of that wedge. Boy, what an overperformer this one has been. Down, 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 and accelerating. So started slow at first, but since the interest rate tightening narrative that has seen the Fed show such vigilance after creating so much inflation, is now seeing the Forex markets, the equity markets suddenly wake up to the fact that the Fed put isn't coming out as quickly as most people expect. This is something we warned of. We've warned of dollar dominance. We've warned of dollar dominance. You're owed a clip. One of the commodity trades that was beyond the milkshake is the pound Aussie dollar. Short the pound, long the Aussie dollar, for those wanting something else apart from the USD. But right now, the USD is the main story, its dominance. And the pound is as bad a situation as the Eurozone. You will see all the Brexit people make out that it was Brexit that did this. They would be pretty nastily way off if they were still in the Euro as well, even if they still retained the pound. Anyway, so what's happened? You've seen an absolute spiller. It's a complete thriller. It's all the way down, and I expect this level run to be run. In fact, we spoke of sub-parity for pound at the same time as we're talking 0.85s for the euro, and you're starting to see that being far more realistic in people's eyes than when we first were talking about a real currency contagion, where the dollar is used and weaponized in its final death throes to actually try hold itself as strength to export all the inflation onto all the other nations. Thereby you get the oil prices coming down in dollar terms, but in actual fact in euro and pound terms they continue to escalate on account of the strong dollar and the global world currency benefit that is still out there to a very large degree. So this is a proper spill down to 108. You gave up the 120 and many other levels on the way down, and this is an accelerating spill. Now the one thing you can say is that occasionally you get capitulation price action, which is a final very painful death throw spill. Our overall opinion is that people have underestimated the nature of the dollar dominance and its spike. In short, until we run our USD Korean won targets where we've got immaculate quality upside HVFs that we have notified you about, you could have got it earlier, of course, in our community. Go to themarketsniper.com. You could be getting more regular updates. You could be seeing how we do this and how pretty much anyone, if anyone's been on top and consistent of message from well before anyone else in terms of both the FX and the bond markets. We call the bond market turn, and we can also show you something on that. But I want to keep the focus initially on the pound. One of the key points that's guaranteed to see your currency go down is when the Federal Reserve shows up and does 0.75% in the markets, and you have double digits inflation on your fake number, and the Americans have 9s and 8s on their fake number. They do 3/4 of a basis point, and you, with the higher official statistics in terms of your inflation, only do 0.5%, taking you from 1.75 to 2.25. Guess what? Global treasuries see your currency devaluing faster, see you increasing rates slower, and they move out of pounds into dollars. It's a simple choice. If I'm managing global treasury for Apple or for some megacorp multinational, I'm not holding sterling, getting a lower interest rate and a faster depreciation. This is interest rate parity, and what ends up happening. The most extreme example, of course, is 0.25 and yield curve control in Japan, and that's going to have make the Japan the Japanese currency, the yen, the real daddy of depreciation in this whole saga, already front running, having gone from 107 to 140. But you've got to accept that the financialization of everything, remember this pound currency, and I remember quite clearly I was watching and trading the pound long during part of these years, way up at 170, topped out in the 2007, just prior to the collapse of the subprime crisis. Wow, was it that long ago? Around 211. There you go. Pound was 211 in 2007. I'll give you the exact date. We're on a monthly chart now. We've left the 3-day chart. That was 1st of November 2007. 211. This is very, very quickly approaching a 50% decimation versus the dollar, and this is the great unraveling. People will say it was this decision, it was Brexit, it was this. This is what I call political cannon fodder for one set of politicians on a stump to try shed another set of politicians in a bad light. I can tell you what this is. This is indebtedness and the financialization of everything, and building the UK around London, around derivatives, around lawyers and investment bankers doing high-value GDP work, putting together collateralized debt obligations instead of making things. Britain lost its manufacturing base. It's lost a lot of the physical aspects that it needs. It imports food. It does a lot of things, and it went fully fledged in the great debt experiment of financialization of everything. This is the anti-metaverse period at the moment. Yes, that whole virtual reality is going to come, but right now in an inflation, stubbornly strong inflation environment, having things, physical assets, not being digital, not having digits in a bank account, not having metaverse goggles, not being ARK, who's invested deeply in the virtual reality realm, actually having oil, food, water, growing things, kind of useful. And that's why I've continued to refer to the pyramid of needs: security, food, and not self-actualization, not ego status related aspects, physical everyday basic needs at the base of your pyramid on the Maslow's hierarchy of needs pyramid. So pound is not so good there. It imports a hell of a lot from a lot of other places. Doesn't run a great trade surplus on that point. Germany had a negative trade surplus for the first time. Remember, this is the engine nearing growth for Europe. Generally, the rest of Europe doesn't do particularly well of exporting and does quite a bit on importing. Germany now, with its energy prices going up and, of course, a recession, hyper stagflation. As I said, I predicted these economic events would be coming in 2009. I even reserved, as I've told before, globalstagflation.com as a link, and I intended to do a macroeconomic forecast and blog around that concept, that we would get global stagflation. This is the inverse wealth effect that you got from the original globalization under Greenspan, and him running a much lower interest rates policy on account of things being so cheap, as they all got moved offshore to China at a much lower labor rate. And we got a massive asset price inflation. We are hyperinflated in asset valuations, still plenty more to come. And this is the big Leviathan, the behemoth great short. And we will be running an event on 11/11/22, the 11th day of the 11th month, November 2022. Not that far off. It's coming rushing at you. This year will soon be done. We've got all the best speakers. We're going to have George Gammon, Daniel DiMartino Booth. We're going to have Brett Johnson, who best espoused the dollar dominance theory in terms of his milkshake theory, and many, many more, all queued up in a marathon back-to-back on that day, where you'll be able to participate in the questions area with us and watch these best minds giving their take of where we are at then. So, pound, what a story. That is an absolute throwdown. And I have many times mentioned to you guys to have a look at charts on the upside down, and what we'll do right here is go GBP USD to get the inverted chart. We retain an inverted chart for that, and let's have a look at it, how it looks. That's how your pound looks, friends. on this big journey that it's on. And you'll actually see we've done a reasonable amount of research on this one, and it is itself in a slightly imperfect upward structure and smashing forward and home. This is an old draw. I forgot I even had it. It's been a while since I've inverted the pound chart and all of that. This slightly higher here, but this is very, very similar to the Dixie chart of dollar dominance, the right way up. So we're looking at the pound upside down, and this is awful. This is awful. The candles are getting stretchier, and it's just smashing through key levels right here and right here, which is showing super dominance on the dollar. You can't tighten at half a point when on higher inflation than the nation that has lower inflation than you is tightening 3/4 a point and is running a higher interest rate level for you. So let's go back to the right way around, because I've provoked all your dyslexia, and show you the Dixie more generally, just to highlight that dollar dominance. And also what it's been doing on oil. Look at that melt up. So many people. And there will be a blow-off period. And the blow-off period will be absolutely vital. Whilst we're on that, we can remind you again of the USD Korean won. Remember who gave you this trade so many times, so long ago, in terms of this, and pointed out that there will be essentially an Asian FX debt crisis, which will be lost in the European and all the others. So it's going to be called a global currency debt crisis. This is just absolutely accelerating. It's turned into a rip in terms of how that's performing. And this is all being driven. Dollar strength, shortage of dollars, the other currencies. And Korea is a very key currency. We've, of course, gone on record on the Hong Kong peg fail. And this is tapping up against it. And for those that say, but, it hasn't happened yet. I will also highlight that for those of you who are too impatient to sit that one out, we said, well, if you don't like the idea of the peg, trade the short on the Hong Kong index known as the Hang Seng 33. Boy, how's that one been going for you? Spiller, it's capitulation. It's an absolute thriller. This is Flight Capital exiting Hong Kong. It is leaving both the currency and their stock market. The outlook is awful. By the way, Taiwan, the Taiwan dollar, we don't always mention that one as well. I have mentioned it a fair amount of times, but I don't over-focus on it. The USD Taiwan, this could have the benefit of, I say benefit inverted commas if you're trading it, the geopolitical stress that is going on between China and Taiwan. That could see it move really abruptly. So let's take a look as a quick update. This is about the pound, but I want to highlight that you're actually seeing real pain all over this. We predicted at 108 the euro Swiss franc would go remarkably down. It's now at 95. The euro USD, the head and shoulder was started at 117, 118. That was round about the time the pound was 142. Yep, up top there on the shoulder, 118, down. Look at that baby go. It's been a core position, and you just got to hold and hold. People are going to get out too soon. I've said this countless times. People are going to get out this too soon. This is an end of system, disorderly event. The derivative markets are going to be rocked by these interest rate changes and these currency events. This is going to be causing potential real banking crises any moment in terms of these moves. It's deeply disorderly. It's turned into a scrap, and the threat of the BRICS and the eventual release of central bank digital currencies are not at all far away, in my personal opinion. And it ends with an absolute dominant shake of the dollar that causes immense pain to rest of the world category. Okay, so we're threatening you with a USD Taiwan. Let's do that. So that was your euro, well sub now, the parity mark, 96. Who'd have thunk it, you said? Well, we told you all about it. And so many people are going to come into this trade and be uber bullish, and then they're going to try claim kudos for already having this on this channel. Even during the selling leg, while they created 6 and 7 trillion, we said this is virtually the footprints in the sand for an upside continuation pattern if it fails to run the low. Look at that as a chart on the Taiwan dollar. up to from 31 from here, and you have, as I say, the potential tailwind on the Taiwan. But today we talk about the Bank of England and the pound. I want to also highlight to you what an absolute dog the UK 100 has been. So if we go and we include indices and we include the FTSE 100, let's see what it brings up. This has been one of the most awful indices. I remember when I moved there in 99 under a Blair government. Under a Blair government, he was bragging about the stock market being 6,997 and never been so good. You are right now virtually barely 26 points over that period. I'm going to stick that on the monthly just so I can show you that period. Oh, we're not going back far enough. That's a garbage one. Let's see if we can get a better FTSE. That was UK 100. Let's try UK 100. So equities and the pound, they're so useless. As well. You've got to have one that goes more than at least a decade and a half. You know, it's not like it's a new index. This is Greek. We want British. Don't know what's going on there. 100. No, let's do the UK. Try ON, it's a bit of a bigger crowd. That's better. And we're going there. So round about, there were a couple of periods and it's still not gone far enough back. This was post the .com crash. So basically around here you had Tony Blair bragging about the stock market at this point. I'm going to stop trying to find it for you. That was the post .com crash that came 99. You had the FTSE 100 roughly here where it is today, and during that period you had the benefit of the pound being as high, although not at the same time. That was 2007. Around about 2007, at this period the pound was at 2.112 the dollar. Today you have had, if you were in 1999 in a FTSE 100 tracker, that is before fees, you are almost exactly flat from 99. You're talking about a 23 years of nothing with terrible sell-offs during that period. Terrible sell-offs, huge amount of fees that would have been charged you, and your pound currency that actually traded at this level over here more than twice plus 10%, 11% over the dollar, is now glaring at a sub-parity run in time. It's got such momentum. Some will say, well, it'll bounce before then, it'll rally. 108 is not yet parity, but given from whence it's come, guys, we feel this blow off in the dollar is going to shock people, and you will get your sub-parity. You're going to be sub-85 on the euro, and even worse on the yen. This is a far more sustained event, and the notion that it's all about fighting inflation and not a geopolitical weapon is a failed notion, in my opinion. So in terms of stock market and currency, the UK stock market index since 99 to today, which is better part of 23 years, is virtually flat in nominal terms, chronically backwards in inflationary terms. When I first went over up north, you would get a pint for 50p. Now I think you can't buy one for £5 in some places. So that's about 10 times for your beer. And at the same time, your inflation rate is in double digits. Wow, wow, wow. What a phenomenal disaster that has become in terms of performance, FTSE tracker. And people, I'm listening to Bitcoiners saying, well, we're believers and you hodl, and if you just hodled, you would have made more money. All these events occurred in an entirely reflationary period. Just holding and hanging on a bad investment has seen inflation and fees destroy you in terms of dollar-based buying power, not gold-based we're talking about dollar, you've halved on the currency level, you're flat on the indice level, and you've got ridiculous double-digit inflation eating your buying power right now, and have certainly run a much higher number than is actually declared throughout that period. It is a disaster. Look, it doesn't include earnings and dividends, but it's still a disaster when you take out fees. So that is the great UK, and the FTSE 100's relative performance alongside the currency effect. I'm here to say to you, we've warned about a winter of discontent. We've warned about rates running. We warned about the debt crisis, and that we were seeing the death of bond markets. So here we go. If I just take you into something I was sharing on the bond markets, this was the bond markets in and around March, April. You had the huge events of COVID. This is the TLT ETF, the huge events of COVID from there up to there. You formed an ascending first inverted HVF in a new trend. And as this break was happening of our grind line and our funnel levels in and around August, we were warning that this could be the final turning for a debt system. Everyone was on Japan and deflation. We said inflation, rate increases, end of a 40-year cycle. Everyone else buy bond, wear diamonds till the cows came home, and so you heard it. Here are your bonds markets today. There is, it's not exactly the same ETF. It's this is from Market Ear from today or yesterday. No, it's actually yesterday. And in fact, we've now rolled in my time zone just past 12 o'clock, so it's a day and a half now. On the September the 20th, the Market Ear, a paid-for premium service, was highlighting the malaise of bonds. And there, my friends, is your head and shoulder, and there is your first break in a new structure with the yellow circle, according to us. That's where you are today, and this has been a short that we've held on our TLTs. You could have done this too. We gave that on YouTube, and you would have got it earlier, and you would have been reminded more often about it. You would have got more specifics about stops and entries. And first it started slow. We made a strong right shoulder, and everyone thought we'd be wrong. Then we did a broadening structure, broke and run, and now it accelerates. It's a spiller. It's an absolute thriller. Your entire financial system is a debt-based system. All your money has been borrowed into existence. The collapse of the debt market is the collapse and the recontraction of all that hyper fluff and super valued assets. And it's very, very dangerous, because that debt is somebody else's asset that's going down. Your pensions are being destroyed right here, right now, because they're stuffed with debt, unless you are self-invested personal pension holder yourself. This is the news before the news, as you are seeing it by the Market Ear on the 22nd of September in 2022. You could have had the call from us in 2020. You get early, and then you get HVF. Early would have been the break of the head and shoulders, really early. No one was calling this head and shoulders. We're still the only guy that talks about the head and shoulders on the bond debt market in a cyclical downside. I've just shown you a head and shoulders on the GBP USD, where the head was at 142. You are trading 108 today. If that trades parity, we'll have lost the better part of 40% on well, no, that's incorrect. You would have lost 4,200 of a 1.42. So you're around about just under a third in terms of your percentage loss on the pound. That is huge. This is one of the biggest currency pairings ever, friends. You are seeing major market moves at the macro level. Crypto has never seen this. It's never existed during these levels. This dollar dominance has seen UK oil, Brent, drop to 86 in dollars. It's not so cheap in pounds, dropped to 79.3 in dollars as well for the Western Texas Intermediate contract. But boy, did it pump from that single-digit low call. You got it here from me on a stage, 2019 in Q4, etc., and again in February. No one else told you. Likelihood for cash market to go single digits in gold while it was trading in 67, just sub 70, was far higher than anyone perceived. And that once that had happened, you would get a disproportionate pump to the upside that actually saw 130 be traded for a while. And that energy, the Rockefeller tax, has run the inflation ruler, and now you're getting second ripple consequence effects in spite of this contraction. And remember, it's a contraction at the dollar level. So what happens on precious metals? As much as this is a pound story, we may as well run you past the gold and silver. The paper price in precious metals, we warned that this would fall. We said this is a double top. You are going to see a chronic deflation. You are going to see a chronic devaluation of all deemed risk-on assets, although this is a far more robust one and will come back super strongly. The thing that's most interesting is that silver broke earlier through this level, but actually is not nearly as weak currently with gold. That is turning, and we did a video and we've done a number of appearances where we highlighted that in actual fact it looks like the gold silver ratio is not going to reach the extremities of last time, unless of course we get a very chronic spill and silver just runs. I think there's a problem with silver. As a result of that, I think you should stack it. I've always felt you should stack it, but there's only been 3 periods where you've been over the 90 level. But let's finish on what the one it's all about. Rule Britannia. By the way, they are retiring the paper notes. If you have not returned your paper notes, that means you don't have the plastic polymer, which probably got some form of tracking and all sorts of other interesting tools on it. By the end of the 30th of September, that money will no longer be considered valued. By the way, we called the turn on the yields in the bond markets as well. We have read this macro markets accurately, like very few people. I've not seen people that have said the outrageous things we've said over this period. This funnel will break. You had a sustained pause for a while when you were challenging this 3, and the big pullback, peak bonds, peak inflation callers, buy bonds, wear diamond callers, all came back up top here. They came back over here. We warned that this is a turning event of trend and that this is going to see debt devaluation and the contraction of money, and that is how they'll break your system and force you into their new system. And that you'll pause at this 3%, but you will in the end continue to the upside. It's not been that bad a pause. There's your funnel in there. There was the previous bounce. You have smashed through that. This to me is a secular reversal. The end of the mega bond bull occurred with the 6-7 trillion that was borrowed into existence, creating an absolute bonfire of debt. Do not miss our 11/11/22 event. Remember it. Mark your diary. We will share a YouTube link for you to subscribe and get notified. Hit always on our channel. Get the best guests. It's going to be back to back. We're going to have 6 or 7 guests back for an hour and a shot, and it's going to be a rolling marathon of updates in November. And I think a lot of things are going to have happened between now and November. Your CBDCs are coming, my friend, and the possibilities of losing money in the banks and the bank hacks could all be swishing around. Okay, you started with the pound, you ended on US 10-year yields. Let's finish with the pound. The GBP, the mighty sterling, listen to that name, sterling, as good as silver, for that silver lining, is in the level where it is now challenging the lows of this wedge. We warned that this 120 would not be a good spell. It had been defended once and twice before. Big fat rising wedge, that rising wedge into that head and shoulders that we were showing you when you first started this clip with us. And since then, my friend, the music has been only one way, and it is accelerating. We warn people to get out of pound. We warn people to get out of euro. We are warning people to get out of the Asian currencies. We are warning the USD Hong Kong dollar peg will fail. We have said that there will be a super spike of dollar strength before this game is up. And this is still not it. You need to stay in the trade. Further downside will and can be possible. This weekend could be a very, very treacherous weekend for banks. Go and follow your bank on Twitter. Be early to get the news. Draw cash. Buy metals. Silver particularly, and keep money out of the banking system. Okay guys, that's it. Don't forget to follow us on Reset Sniper on the Odyssey. We've just released the controlled demolition of the financial system on Odyssey. You'll require a couple of LBC tokens for that. You can also make a donation and we can purchase them for you. Go to Odyssey under The Market Sniper. That's right. You can follow us on Instagram. Lots of tidbits and good generic information, but in short form on there. Thanks for watching. The pound stays in trouble, remains in trouble, and despite this being capitulative, it can get far worse before you will get to the bottom of it. Lots of bottom callers have been coming out, lots of peak callers on the yields, on inflation. This has to break the system. It is going to keep going until it breaks, and the dollar is the wrecking ball, and debt is dying, my friends. And with it, the financially engineered currencies that do not have the unique privilege that the dollar has are going to be in deep, deep trouble. That of Asia, Japan, particularly indebted, going to be one of the worst, the Korean won, and of course, Hong Kong dollar, Taiwan dollar, the CNY. We didn't look at that. We can do it another time when we focus on Asian. But in Europe, euro and pound. Bye bye, Miss American Pie, they say. Okay, catch you next time. Thanks for watching. Thanks for following, and we'll see you soon.